Hello, everybody. Welcome for the Agent Advantage webinar for August. We will get started in just a moment or two. I'm Kurt Klaus. We'll introduce guests and get rolling. Before we go, could you, lots on the call already, just please give us a sound check, give us a wave or an okay if you are good with seeing our screen and good with the audio. Awesome. Thank you, everybody. So hello, real estate professionals. I'm Kurt Klaus, and again, welcome to the Agent Advantage August monthly webinar. Today, what every agent needs to know about new construction. If this is your first time joining, thanks for being here. For those new, these monthly webinar, this whole series is brought to you by the Guaranteed Rate Companies and our Agent Advantage website. Agent Advantage is proprietary to Guaranteed Rate. We usually do these on the first Wednesday of each month, and it includes topics and expert speakers, and it's intended to help you increase your production and improve your knowledge on all areas of your business. So the focus today is to help you, the real estate agent, learn a little more about the new construction process, learn how to create effective partnerships with builders and why builders and agents should work together. We'll bring in our guest shortly. He is Jim Colella, the National Builder Program Manager here at the Guaranteed Rate Companies, and he's going to cover our goal today: new construction process, new construction financing options, what your role is in that process, how you can bring value to builders, the builder-realtor relationship, and also we'll kind of go into debunking some myths about working with builders. So again, this is brought to you by the Agent Advantage website. If you're not familiar with Agent Advantage, the Agent Advantage is a no-cost website, proprietary to us. It's all about making your life easier, helping you look good, helping your clients. It is for agents across the country like you who trust us and work with us to use our technology and our efficiencies. There are 3 versions of Agent Advantage for all 3 of our companies, just to disclose that. Agents.rate.com for Guaranteed Rate, agents.grarate.com for the Affinity Company, and agents.properrate.com for our Proper Rate group. So please be sure you're going to the correct version for the company you would like to work with. All of these webinars that we do, they're archived on the site. Agent Advantage's coaching and technology and marketing, tons and tons of tools. Our whole video series is in there, so check out the Agent Advantage website if you're not already a member. Little mention to our new Agent Advantage Insider Facebook page. You can click that QR code right on the screen if you want to request to join Agent Advantage Insider new Facebook group. This is a private closed group. You can submit a request to join. Again, scan that code or just go to Facebook and search Agent Advantage Insider. Agent Advantage Insider, this page, again, closed group. It is articles and information and content and news. It's a forum and a mentorship program. We're going to kind of add that. So submit a request to join us for anyone in the industry, but the insider page, we rolled it out a couple months ago and we're at 1,600 members. So we want to build and grow this, and it's all for you. And just like the Agent Advantage website, the insider page is all about growing agent excellence. So again, glad you're here. Let's get going. Before we bring on our guest speaker, and I also want to introduce Nick Ermo is the VP of Channel Marketing. He's with me here on the Agent Advantage team, and he will help kind of wrangle questions and roll the discussion with Jim. But before we get started, and before we bring on Jim, I want to put up a quick poll. Danielle is going to post a question. We want to gauge you, our audience, and see what kind of experience everyone has. So take 5 seconds and answer that question. And again, during this entire webinar, we do these live. Please ask your questions, type it in the chat feature in the GoToWebinar, and we'll answer those live on the fly if it's appropriate. And then we have time built into the very end of the webinar. well, we'll answer all your questions. So this is your chance, along with taking down notes, to ask your questions to Jim and us, and we'll get to those live. And Danielle already has the results right here. So looks like we are majority of people not having done a new construction deal or done in the last half a year. So
okay,
super helpful. So want to bring on Jim. I'll let you give a little background on yourself, Jim, and I've already introduced Nick, but thank you so much for being here, Jim. How you doing, buddy?
I'm doing well. Thanks, Kurt. Appreciate the time, and it's a pleasure to be part of the Agent Advantage series. It's a great program, and glad you thought of us here with the new construction program.
Awesome. Happy to have you here, and we'll let you get rolling, but wanted to let you know, and we're glad Danielle pulled that insight up, but we know kind of gauge the experience of our audience and who we're talking to. We got lots of people on the call, so I figured that would be helpful at the very beginning.
No, absolutely. So yeah, with the poll, our goal was to just get a general sense of what the audience level of expertise is, and it helps us sort of direct sort of the conversation a little bit. And there's a lot to talk about with new construction. It's an exciting part of the business, and as Kurt mentioned, I'm the National Builder Program Manager for Guaranteed Rate Companies. So what that means basically is I help with our internal loan officers, as well as external builders, build relationships so that we are a preferred lender, ideally with those builders. And when the customer comes in, we have an opportunity to help that customer get pre-qualified quickly and have great experience throughout the building process, and of course get those homes closed on time. A big component of that relationship and that partnership that we try to create with our builders is with you as realtors. Builders, generally speaking, budget in a big chunk of their sales right out of the get-go every year to work with realtors. Many realtors don't know that, but on average, whether it's a small builder or a large builder, 50% of all sales are plus or minus are budgeted by the home builder and the developer or the condo developer to have a realtor involved, if not in some cases much greater. So know that you are always considered, and that you're going to be part of that process. One of the things that Kurt mentioned, and we'll get into here in a little bit, is some of those myths and some of those sort of challenges that we've seen come up, where maybe a realtor doesn't feel comfortable going into a builder sales center or bringing their client there. Maybe that client accidentally kind of waltzed into a sales center and now feels that the builder isn't going to cooperate with them, the realtor. So we want to talk through some of that and make sure you're comfortable understanding how builders think and kind of maybe the best way to approach those situations. And just an overarching comment, we've seen the landscape change here, in the last, call it's year to 18 months, right? With COVID and just the amazing lack of inventory that has pushed customers to and buyers to builders. Builders are killing it right now. They're selling more than they ever have, and they in some cases are raising their prices and making it less easy to buy, because they're not offering incentives like maybe they used to, and that was a value add that a realtor could bring to the table, is how do I negotiate a better price. Builders are less likely to do that today. Builders are less likely right now to quite frankly offer the same kind of commissions they were offering to realtors. So those are some truthful things that we have to work through in today's climate. So we want to make sure we at least address those, and there's going to be some time at the end of the seminar here to talk about those if you have specific questions.
Yep, please everyone submit your questions in the chat. And I guess Nick and Jim, you guys aren't surprised by the poll results. That's pretty much in line with what you said, with 50% of deals have a realtor involved currently.
Yeah, I think reality is it's going to be continue to be a builder new construction world here in the next probably 18 months. We don't know. We don't have the crystal ball, of course, but builders right now are in the catbird seat, and they're struggling too, right? And from the standpoint of they have a shortage of labor. You've heard about all the material prices going up. Lumber was way up. It's come somewhat down, but even all the other materials, appliances, electrical wire, just drywall, everything's gone up. So prices of homes are going up disproportionately to resale. So new construction is going to cost more, and builders don't always know what their costs are going to be in 6 months, 9 months, or a year. So one of the things that they're doing is restricting sales a little bit, where they may have said, yeah, sell as many as you can. The salesperson in that model home out in the suburbs, or that condo building in the city, they may say, that's not built yet. They may say, hey, sell 10 a month. We don't care. They may now say, we're selling 4 per month, until we really understand what our costs are. So in some cases, don't get frustrated if they're not opening up that next phase of construction. But truth of the matter is, that is where the inventory is, right? So you, as and from your borrower's perspective, you want to be comfortable knowing that when your borrower or your buyer, our borrower, says we want to see new construction, there's a few things to think through. So we're going to talk about those, and then kind of the value of what Guaranteed Rate brings to the table and other lenders, and when it comes to extended rate locks to protect that borrower through the process. So if it takes a year to build that home, how do I make sure their interest rate stays the same so they still qualify at the end and they're not having anxiety throughout the process? So those are also things that are really important on the new construction space. So I'm going to go ahead and
get rolling. And Nick and I will jump in with questions when we can, not to derail you, but let's get going.
So Guaranteed Rate is set up to be a lender that is going to help builders sell and close more homes, which again incorporates you as a broker and a realtor. We have a team that handles this on the builder space. We see the value in it, so we help with marketing and events. We work with our realtor community to help sales center meetings. Putting in maybe a food truck to a site that doesn't have the model home up yet. We'll partner with our realtors to make sure that we can maybe bring that traffic through the door that where there's no model home yet, or even a neighborhood yet. So know that we offer those kinds of things, and we'd love to partner with you as a realtor to make sure that you're part of that process and you're part of the initial relationship with that builder. We'll kind of get into more of these details, but again, I mentioned extended rate locks. Some of the things that are the next slide here, 3 ways to go about purchasing new construction on a new construction basics. Many of you have seen buying a house that's already built on spec, meaning it's already there. The builder built it. They picked the colors. They picked the lot and the options, right? And that was a house that was ready to go. So you didn't have to wait for the house to be built. Well, guess what? That's not happening as much anymore, right? Because those houses are selling like hotcakes. They can't get them built fast enough. But that is what calling when a house is built on spec, or an inventory home, as many builders call it, is going to be ready to go. Those are very nice, and a lot of builders are still cranking those out because they can control those costs. So know that in many cases, builders still have on their websites, on the MLS, not always on the MLS, but it's good to always visit that sales center to see what inventory homes they have ready to go. And sometimes they're homes that fell out from another borrower that moved or lost their job or whatever. Second way is having a home built from scratch as part of that development or community. That means when you walk into the sales center, you work with that loan officer or that salesperson, and you pick everything out on your own. You pick the home site, the lot, and you start from scratch, which most builders, depending on what part of the market or country you're in and how big of the home and the price point and all that can be anywhere from 4 months up to a year, with the average being 5 to 6 months from the time you buy the home, sign on the dotted line, to the time you finish and move in and close and the moving truck rolls up. Add 30 to 60 days lately because of the backlog of homes, but on average about 6 months. Third way to typically build a new home is to have a custom home designed on a buyer's or a builder's individual lot. So this would be your more upper bracket, typically, not always, but some in rural areas, not so much, but really, your higher end home could be a tear down of an existing home. It could be just a really big lot on a big parcel and just a multi-million-dollar home in a very exclusive area. So that's going to be a whole different program, right? That's almost like a different type of business, but that's another way to build a new home. Note that many builders have in-house lenders or ties to an outside lender, like a Guaranteed Rate, but you can also find your own financing as a customer. So don't feel pressured necessarily to use that builder's lender, or know that there are options for you or your buyers to make sure they have different ways to go about financing it, that home. It can be a little intimidating when that builder has their own lender. We're going to talk a little about that, but that's not always necessarily something you have to do. And that leads right into financing options. There's still some misconception out there, everybody, about buying new construction. It still shocks me, right, a little bit. And I'll hear feedback from our loan officers and our realtor partners across the country is, you can buy a new home with 5% down, right? Most homes in this country today are conforming loan limits, and meaning in most markets $548,000 or less, and they have and most builders will let you put 5% down or less. So on an average new home across the country these days is about $350,000. So that's not a lot of money in the big scheme of things. Same with FHA, VA, USDA. We do a ton of VA business with zero down, right? Now the builder may require some money down, but in many cases, it's zero down. FA, and that's jumbo too. FHA, it's only 3.5% down. Then you get into state-specific bond loans. Sometimes there's down payment assistance programs where there's zero down. Certainly, those are attractive for a lot of folks who are in a first-time buyer situation, and those are things that we do here at Guaranteed Rate. Jumbo and conforming high balance, again, that's your above $548,000 and way above. Certainly, we can do that, and many builders partner with us for that reason. There's other fun things like rate buy downs, where we can actually help buy the rate down to help a customer who's maybe scared or nervous to come in from renting, or maybe they're living in their parents' basement, or maybe they're just like, oh my gosh, I can't believe I have to spend $700,000 on a house. We can help and work with the builder to actually get that rate bought down either permanently or for the first couple of years. So there's some very creative ways that we work with builders to help buyers feel more comfortable moving forward. I'll kind of skip to the construction of permanent loans or one-time close loans you may hear about. That's going to be more about your custom builders or your smaller builders in more rural markets. That's product that is going to be more complicated. That's not your typical. So I tell people all the time, there'll be over 1 million homes built in the United States this year, new construction homes, 1 million homes, and that includes condominiums. And 90% of those homes, 900,000 roughly, right, are not construction to permanent home, built homes. So that means the builder builds the homes themselves. They pay for the lumber, the labor, the material, the lot, all of that, right? They just ask the customer to pay 5% down or 10% down, and the rest they do. They get a mortgage through a company like Guaranteed Rate, and then we close, right? So the construction of permit is very different, where it requires the borrower to get a loan from a local bank or through a broker. We have outlets for that as well, but not nearly as common. So important to know the difference, and I'm happy to answer more questions about that later. Last on this slide is the condo presale waivers and non-warrantable condos. Without getting into too much detail, basically condominiums are really popular. They're coming back now. And most projects are very doable and are able to be financed through lenders like Guaranteed Rate, where we can do things that are, even if the building hasn't started yet and they haven't met their quote unquote pre-sale requirement. So know that shouldn't be a stopping point for you to work with a customer or bring a customer into a sales center. Okay, I'm going to keep going. Kurt, Kurt or Nick, anything you want to add before I keep going to the next slide here?
I have a kind of a general one for the agent, for an agent on the call that has never done any builder business. What would you recommend to help them, gain and get and be involved in the builder business in their local market? What would you tell an agent?
Yeah, that's a great question. So, some of the basic things I would say. One is, make an effort to sort of do some, call it recon, do a little bit of due diligence and go out and visit some of these sales centers. They're all back open now for the most part. COVID, builders have been pretty pretty careful about it, but now it's time to go and visit the sales centers, do some preview tours, drive through the communities, the neighborhoods, take note of the architecture, take note of maybe the community amenities like a park or a pool, or just in general, where's the location? Maybe it's right near your house. Maybe it's just one you've seen off the highway. Go in and talk to the salespeople on a non-busy day. Saturdays and Sundays are their super busy days. Go in on a Wednesday. Bring them a Starbucks, or bring them just a smile, and say, hey, look, I'm learning about new construction. I certainly don't want to take a whole lot of your time up, but I really admire the architecture of your homes, and I'd love to see the design, walk through the model homes. And could you tell me a little about kind of what makes you guys a little bit different than your competitors? And just enjoy yourself to those salespeople. They have a lot of downtime. Keep in mind, those salespeople in those model homes typically are there. They're captive in a way, right? They're required to be there certain model hours, right? So get to know them a little bit, build some bonds. I think that's one way. Another is get involved with your local home builders association. As a realtor, it's fairly easy for you to go in and go to a builder or a home builders association local website. Just Google HBA or home builders association, whatever town you're in. And they have a calendar of events, and 9 out of 10 times, right? There's on their website a calendar of events, and you can look and see over the next 90 days, is there a cocktail event? Is there a sales and marketing council sort of mixer or a fundraiser or whatever? Could be a golf thing, doesn't have to be a golf thing, and just go visit, and it maybe cost you 35, 40, 50 bucks, and go in and just say hello and mingle a little bit and get to know some people. Builders are typically really welcoming. I mean, they like what they're doing. They're in the business for a reason. They're pretty friendly. They kind of all know each other. Salespeople move from project to project all the time. So, if you get to build a rapport with one and they sell out of a neighborhood and they move to another one, or they quit and they go to another builder, those are some really nice ways to get in front of those builders to just at least start to learn a little bit about how they do business, so you don't feel like you're super awkward when you take your client in for the first time and feel like you're kind of up against somebody that you don't know what you're doing. So I hope that kind of helps a little.
I love it. Yeah, perfect. Thanks for that.
Yeah. And then so I want to just real quick, I'm going to cover this. Whoops, I skipped there. Our value proposition for home builders and guaranteed rate. Certainly there's other lenders that also do some of the things we do. Of course, we try to differentiate ourselves in certain ways, but one big thing, you want to make sure a lender that you work with as a realtor that is going to be involved with new constructions. Extended rate locks are really important right now, everyone. Builders are asking us. We gain a lot of builder relationships because of our extended rate lock program, which protects the builders from building a house with pink carpet and green tile for a customer, and then 12 months later, the customer says, you know what? I can't afford it anymore because I bought a Cadillac Escalade and I bought, 50 grand worth of furniture and I don't qualify anymore. Sorry, even though they're going to lose their money. And the builder goes, oh my gosh, what do I do with this house? They go, rates have just gone way up, right? Let's say in 12 months. Well, if we do an extended rate lock, that means they're locked into that rate. And if rates go up, they're protected. You're the hero as the realtor and the broker. The builder's happy because their home's going to close, and the customer, just the anxiety level of the customers just are way just relaxed. So as a former salesperson, starting out and working for home builders and developers, well before I got in the mortgage world, I worked in different capacities. I can tell you from personal experience, having a customer that had an extended rate lock avoided that customer coming into my sales center on a busy Saturday and bugging me and saying, Jim, I hate to bug you, but rates are going up. Should I lock my rate? That's the same for you, right? As a broker, let them, the extended rate lock's a nice feature, right? I'll keep moving here. Traffic generating events and co-branded marketing. We kind of talked a little bit about that. We can work with you and with the builder to kind of all work, as a team to put together events so that builder sees value in your role and our role. Other things that we do, we think through what builders need, right? So making sure the closing process goes smooth. We don't require escrows. in many cases, not all, but in certain cases where it's a weather-related item, we can just waive those completely. We take the risk as a lender so that that driveway's not in February in a cold weather climate. Don't worry about it. We'll take care of it. We'll figure out later on, and we'll close on time. The builder doesn't get anxious. We have some things like a digital mortgage kiosk where we can actually put in the sales center an iPad with our digital mortgage qualifier, so it helps get customers qualified. That helps you as the broker and the builder to make sure before you spend too much time taking through the really big model, maybe they should just go to the medium model so they're not, getting their hopes up too high, right? And then we do some things along the lines of appraisal panels to make sure that we don't have the same sort of issues that you see with resales on appraisals, and that helps tremendously. So there's consistency for those same appraisers to go back into the buildings or the homes in the neighborhoods, and that I can just tell you is a tremendous value. So I'm going to kind of keep going here. Kurt had mentioned it kind of early on. There was your role in the building process. So staying close to the transaction while your buyer's home is built, I should say built, sorry, is critical. Right now, again, as I mentioned, the climate's changed a little bit, right? So, you want to make sure you are doing your best. Some builders have different policies on how they are, allowing that customer to come in registered or not with a realtor. So, for example, if you come in as a buyer and you've been working with them for 6 months and they've looked at 30 resales, they can't find anything, or if you've gotten outbid on everyone and they're super frustrated and they're like, we're going out looking at new construction. And so they start going out and they start hitting the model homes. That's okay, but make sure before they go, you do a little preview, as we talked before. Maybe you visit those model homes yourself, those neighborhoods, and sort of do chat with that salesperson. Ideally, you go with them, right, and get them registered with that builder. Do they with the little registration cards? Some builders are very cool about it. Like, that's fine as long as your customer says they're working with a realtor. You don't need to be there, Mr. or Miss Realtor, to be qualified for the commission. But some builders are tough, and they're saying, you know what? If you weren't there when you showed up, when the customer showed up, we're not going to give you that commission. And they're pretty firm about it. So I just be conscious of that, right? Especially now when builders are sort of looking to save costs, and they're being a little bit more arrogant in some cases. So that's a big one. And but touring that model home up front shows your customer and your borrower your buyer that you care, and you've looked at it. You're like, there's some things I really like about this particular home in this neighborhood. I've looked at 4. They're all in the same school district. They're all close to the highway. They've all got price homes in this price point. They all have bonus rooms up on the second floor like you expected, but here's the ones I like, and here's why. And that will go a long way for you and your buyers. The contract signing, preferred lender incentives are common. We work with a lot of builders where we actually, as guaranteed rate, we work on a smaller or slimmer margin, as do our loan officers who have agreed to do this because they work on these coveted builder accounts where they will take less in order to be able to provide incentive to your borrower or your buyer, our borrower. So what that means is that builder will often tie that incentive that we're offering to use us into their purchase agreement. So you want to vet those out ahead of time, right? And make sure that you understand what incentives are being offered. In some cases, it's the builder that offers the incentive. Maybe it's both. Note though, because again, the market has changed so drastically within the last 18 months that some builders are just not offering incentives at all. The lender incentive may still be there, but they're not offering an incentive. And so your role as a realtor isn't there to negotiate, with the builder necessarily, like maybe it was a couple of years ago. So know that if you go and try to play hardball with an incentive, it's probably not going to work. So just it doesn't mean you have to do it either way, but just it's there. Financing upgrades and options is something that you just need to be careful about. Most builders are going to be okay with you as the buyer saying, hey, home starts at $300,000. I want the 3-car garage. I want the, upgrade 2 cabinets with the glass, panes. I want, the upgrade 3 carpeting with this pad, whatever, right? So all those things can go into the home price, and they just roll it right into the mortgage. Some builders don't. So you want to make sure as a realtor, as a broker, you're asking those questions, right? Hey, how do you upgrade your options, or how do you finance upgrades and options? Do you require the customer to pay anything additional beyond the normal, just 5% or 10% down payment? Construction of the home. We talked about extended rate lock protection. Pros and cons. Talked about the pros, right? If you lock in a rate today for 12 months and it takes 9 months to build a home and you close and the rates had gone up from 3% to 4%, you're the hero because you suggested it. And so is guaranteed rate, right? And the builder's happy because we closed with a happy customer. The con could be, though, is if the home is severely delayed and you don't end up having a home that's built on time, meaning the lock expires, right, before the home's built. You lock in for 9 months. It takes 12 months to build the house. Conversely, right, that can get very expensive from an extension perspective. So my point in telling you this is it's not always roses and puppy dogs and, and rainbows, right? It's let's make sure you're talking to that builder and that customer. When you tell us, Mr. Builder, that my buyer is going to be done in 6 months, is that from today we sign the contract, or how long before you actually dig the foundation? We just need to understand, because we're considering doing an extended rate lock. What would you suggest we factor in as a buffer in order to protect my customer, because we do not want to be subject to extension fees, which can be very costly. That will show you, I think that shows a lot of strength to you as a realtor, that you've thought through these things and that you care about your borrower and your buyer, and you know what the heck you're doing. So those are a couple suggestions there. Appraisal process, we just put that there because we see some situations where the realtor sort of checks out after the transaction's been underway. Doesn't mean you shouldn't check in every once in a while. Talk to your preferred lender, talk to your customer, stop in the sales center, make sure that the house is moving along nicely. And we order, just so you all know, we order the appraisal as a lender at least 60 days prior to the home being closed. So why do we do that? The house isn't finished. It's in drywall. We do that because we want to make sure if anything comes back that's really different or could be a real problem, that value's way off, or maybe they missed a bonus room or whatever the case may be, that we have time to correct that and fix that and work with the appraiser. And then it's a very simple process. The appraiser understands that, hey, the house isn't done. These other things have to get finished. They come back for a final appraisal a few days before closing, and we order that and manage it. But just you as a broker and as a realtor, we want you to understand that process and be aware that there's a little bit of awareness you should have. And then closing and funding the loan. I mean, that's our job, but stay close to it and make sure that you're talking to your preferred lender. And things can get real hairy at the end with a new construction deal, even though it's simple, it's a purchase loan, but we can get a little bit any help we can get from you is in terms of awareness and making sure all those upgrades and options were covered. We're certainly gracious to that. Okay, Kurt, how we doing on time?
We're good. Lots of questions rolling in. We'll save those for the end. Daniel, but we're right on.
Okay,
hey,
great.
Jim, we've got a lot of questions that pertain to this slide. So just as an announcement for everybody who's asked this question in the last 10 minutes, here's your chance to get the information you're looking for.
Okay. So so this is our lock and build program. Is and I would just tell you, so we've had an extended rate lock program here at Guaranteed Rate Companies for just about 5 years now, and since we really got our new construction platform really foundationally built. And in the last 9 months, we're year over year we're up 800% in usage of this product. And the obvious reason is, right, people are like, they want to make sure they're protected. It's an insurance policy. So, again, you kind of heard me talk a little bit about this, but it's a protection for all three parties in the transaction. Builders like this, right? Because again, they're building homes specific to a customer. And if it's a tightly qualified customer, for example, they want to know that, boy, at the very end, that customer still qualifies even if rates go up. So for them, it's a peace of mind. It protects what they call their backlog. Okay, so builders like it. Lenders, of course, like it because we know there is a fee that's associated with this, right? So there's both refundable and non-refundable options. I can dig into that a little bit if you like, but basically the idea is that there's very reasonable cost associated with this. However, there are some costs to provide. The customer does have to have some skin in the game because there's real cost to us, Guaranteed Rate, and other lenders who offer this type of program to lock this loan in for this long. If rates go way up, we lose money, right? If they go down, it's locked in a certain rate. It's a wash. We don't lose money, right? But the idea is that we're here to do this as a service to our borrower and our referral partners, you and the builder. So we're trying to make this be a way for us to gather and gain new business. So we look at this as a must-have. At the same time, it's something that there has to be some costs by the borrower involved. And that way they're more likely to stay with us throughout the whole process as well. They're not gonna 3 weeks before closing, try to shop around for a new rate. And to that point, we do offer a renegotiation option, which is the second bullet here, if rates fall prior to closing. So let's say, rates today are 3%, and they go down to 2%, probably not going to happen, but, in 9 months when the home is finished, we do offer an option to renegotiate that rate, depending on how we locked it in, whether it's a refundable fee option or a non-refundable fee option, that you can get the exact rate, best rate today available, or it might be the exact rate today plus a little bit higher, depending on how you chose to set it up. So that's a nice feature. So your buyer knows, hey, okay, this is going to cost me a little bit of money, not a lot. It's going to cost me a little bit of money, but at least I know I'm protected if things go through the roof. If they don't and they go way down, I've got a chance to get that rate, get a better rate. Some other fun things, and I'll answer specific questions here after I get through these bullets. No upfront fees for VA loans. I think this is exclusive for Guaranteed Rate. I'm not aware of other lenders that do this right now, but we love our vets, and we don't charge fees for app fees or other fees for our veterans, and we do a ton of VA new construction business. So we actually don't have a lock fee for our upfront fee that the vet is required to pay. It does affect the pricing of the loan a little bit. It affects the rate a little bit, but again, there's a float down option if they like. But that's a big hit with our builders who do a lot of VA business in certain markets. It's through the roof. We can do conforming, so Fannie Freddie, fixed rate, FHA, mentioned VA products, high balance and jumbo, so high balance in certain markets. We offer the extended rate lock program on, and that one's up to 6 months on the high balance. Jumbo options through about 4 different investors that we work with specifically. And then we have a new enhancement we just launched within the last 120 days called Premier Builder Lock and Build. And what that does is creates an even more attractive option for our Premier Builder partners. So those that we work with closely, certain builders that meet certain criteria that work with us. So give you a quick example, a 6-month lock, which is our most popular. It would be on a non-refundable fee. It's a 0.5 point. So on a $300,000 loan, that'd be a $1,500 fee that we would ask the customer to pay. And their rate would stay exactly the same for 6 months. So now they don't get that back. They pay that fee that goes, that's there. But then they have that. Let's say today's rates are 3%. They close at 3%. If rates drop to 2 or 2.5, they can go right down to 2.5 with no extra costs and still take advantage of it. That's arguably really strong, right? So we really use a lot of this. Builders love it. Realtors love it because it makes them feel comfortable, their customers protected, and the customers feel really good as well. So those are kind of the basics of it. I could, this can get really, very complicated, but in the sense that just a lot of different ways to slice it and dice it. Builders, by the way, often do, while we still have to collect the fee from the borrower, specifically buyer, the builders oftentimes will pay the fee as a closing cost credit. So that $1,500, the builder may say, hey, we love that. We'll take care of that as a closing cost or a seller concession at the end. So know that there's ways to sort of to play with that to make that a free lock as well. I'm going to stop there. Nick, I'm not looking at all the questions here that are coming in. Is there any specific questions on this that we want to talk about now since we're in the weeds on this?
You know, a lot of questions are coming in, and as you're talking, I'm hearing you answer quite a few of them. So I think that we're on a good pace. But
Okay.
Some people are asking questions specifically about certain builders, and I don't think we have the time or a list that's complete for everybody we work with. But we are obviously a nationwide company. We're obviously partnered with quite a few builders, but I would check with your local LO to see who specifically we're working with in your community if you're interested.
Yeah, that's probably a good idea. I mean, and just, give you a sense of things, and that kind of probably good to talk a little bit about. And we work with builders in all shapes and sizes, right? I like to say we love all of our children. We have builders that build 10 to 15 to 20 homes per year that we have wonderful relationships with, where we get most of those loans, and they're wonderful builders. We have builders that are building thousands of homes per year, where we're maybe one of 3 or 4 preferred lenders. So most of the largest builders you can think of in the country, depending on the market, we're not in every market with every builder, but some builders even have their own mortgage companies, and we work with them. So that's one thing to know about. It's not necessarily, this is a little bit of a threading the needle situation, but what a lot of loan officers and realtors will get frustrated with is they'll go into a sales center, and the builder says, it could be a Lennar or a Pulte or a DR Horton or an MI, or all the Toll Brothers, and they'll say, oh, I understand you have your preferred lender you'd like to work with, or you've got a loan officer you've already worked with, but we have our own mortgage company, and we offer a $5,000 incentive or whatever to work with them. So we really think you should go through them. Now that's okay. But I will tell you this: we win a lot of business against those in-house lenders. In some cases, we are unofficially anointed as a preferred lender with some of those lenders or those builders I just mentioned. All those names, we have relationships with them in certain markets because their lenders internally cannot always do the deals that we can do. Doesn't mean they're terrible deals or bad deals or poor credit. Could just be complicated, self-employed, or maybe just unusual credit situations. Maybe it's a foreign national. It could be just a situation where maybe they goof something up, and the internal mortgage company just isn't creative enough or savvy enough to figure out how to navigate through the guidelines, and so we'll end up doing business that way. So I want you to know that don't feel necessarily always pressured to just let your buyer have to work with that in-house lender. They should always certainly talk to the in-house lender, and on top of that, that incentive is up for negotiation. So some builders are going to be real tough, real hard guys about it, but many will not. Many will just say, if you say, you know what, I appreciate that you've got the in-house lender, but I think your rates, sometimes because their rates are higher, by the way, they're not to cover that incentive. But if you say, hey, we work with guaranteed rate, I've got I'd like my customer to kind of take a look at what he can do as well. And is there a way for you to offer for my customer to still get the incentive that you're offering, Mr. Builder, if I use the lender that we've already got pre-qualified for? And in many cases, the builder will say, well, let me check. Yeah, that's okay. Or they'll say, well, we can do half of the incentive. And in some cases, we can cover part of it because maybe their rates are higher than guaranteed rates, and we can make some adjustments. So I'm not saying it works in all cases, but there are many cases where even the builder will allow us, because we've been blessed, again, as one of the preferred lenders, to get access to that incentive. So never assume that, oh, well, builder's got their own lender, I guess we just have to use them, because you may be doing your buyer a disservice, especially if that in-house lender's rates are really high. So I hope that makes sense. That's a big one I see happen. and we overcome that in a lot of cases.
Jim, that's great info. And I was just thinking about my own personal experience. I did some rate shopping. I did, some comparisons when I was buying my house out here. And also the builder offered me an incentive, but it turns out that when I was looking through the GFE and just the points that they were adding to it and everything else, it was apples to apples anyway. Maybe you can help us really know what you should look for to make it an apples to apples comparison instead of just looking at the incentive dollars. Like, what else should you look at to determine what's the best loan there for you?
Right. I mean, no, it's a good point, Nick. And it's certainly rate, right? So one of the things is that there's the loan estimate, right? That has is going to list out those fees. What are those upfront fees? The application fee, appraisal fees. What is the interest rate and the APR? All those things. It's always good to get that. And if we can get a copy of that loan estimate, that LE, and you as a broker or realtor can say, you take that to your trusted lender partner and say, hey, can you take a look at this, because I want to make sure my buyer is getting the right deal. And I mean, really, that's the best way, because we can look at it and say, yep, we can go side to side, T-square sort of a comparison, and in many cases they're so far off because they're building that fee right into the rate. So now, and in some cases, it's a situation where maybe we can't cover the whole incentive. Maybe it's a $2,500 incentive or a $5,000 incentive, and we can cover, let's say we can cover $2,000 of it, but our rate is a quarter point less, and over just several, you call it 3 or 4 years, you're going to, on a 30-year mortgage, you're going to make up that $3,000. And year 4 or 5 and beyond, it's going to be all gravy. Why would you lock yourself in, especially with rates being so low, to a rate that, just because you're for a few $1,000s, right? So let your trusted lender partner, take a look at that, comparison. And many times, we could beat that. And you know what? And if we can't, we can't. And maybe it is the best deal to go with that in-house lender with the builder, and that's okay too. It just depends on the situation. You just want to make sure you're doing right by your customer, because there's situations where that builder is going to be just way off the mark. And again, quite frankly, the other thing that we see happen, and we get calls from bigger builders, and they want to make sure that they don't disappoint a borrower. So let's say a customer comes in and there may be credit challenge to some degree, or there's just something unusual, like I mentioned before, and that customer says, and the customer is getting a no, they're getting a denial from the in-house lender, from the builder. Well, how does your buyer feel? They feel terrible, right? They feel dejected, they're embarrassed. You don't want to lose momentum. So smart builders will then have a guaranteed rate, or another lender say, hey, sometimes it's just how things are looked at. Let's have a different, let's have a different set of eyes on it. We'll take a look at it and we say, boom, 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 we can do this, and it's just maybe it's a product difference that we offer that the in-house lender doesn't, because they're more restricted in terms of what they can manage or approve, and we get the deal done before too much time has passed and that customer's lost sort of the wind in their sails. So it's just good to know these things, because I do hear some sad stories of where somebody didn't get the home because they got rejected by the in-house lender, and they felt like they were getting beat up. So keep your trusted lender partner at the ready, even if they're a little bit initially miffed. That pre-qual seems like it might be at risk. So I hope that makes sense. Okay. Any other questions on the lock and build you think there, Nick, that we should cover?
I think we're doing pretty good.
Okay, cool.
I'm going to save a couple for the end here, just because they're a little bit more difficult, and I want to make sure that you get through all the material that you prepared.
Yeah. So I think the last slide really here before we get to questions is the new construction myths, which I think we covered some of these just through the conversation here. I think there still is that myth out there. And by the way, background for me real quickly, I started selling homes in You know, back a long time ago, I was the guy in the model home, you know, on the weekends and Saturdays and Sundays, and toured people around in the models and drove around and had the hard hats on and the whole thing. And I got to work in that field for a long time and ran a sales team and did some purchasing and some land development. So most of my life is working for builders and working with realtors on the builder side. So I can tell you that we coveted our realtors, and most builders do. There are some builders that can get a little snotty sometimes and give the perception they don't like realtors. Right now, again, especially, there is a little bit of animosity out there. I'm just going to be frank, because builders have reduced their commissions in some cases that they're paying realtors. I think it's temporary. In some cases, I do think it's short-sighted. I'm not going to lie to you. In other cases, I just realize builders are getting hammered because they've sold homes at a certain price, but then labor and materials have gone up so much, they're kind of getting, you know, beat up. So, but just know that generally speaking, builders do build in at least 50% of their sales. In the condominium world, is more like 70 to 80% of their sales have a realtor built right in. So they've already built it into the price, whether they use you or not. So don't feel like because they're paying you that they don't want you there. That's not true. And I can tell you that I had trusted realtors, and Nick and Kurt and I talked about this a couple weeks ago when we were preparing for meeting with all of you. Was you know, I remember realtors coming in that were just wonderful, that had done all their homework up front, knew their customers were not going to buy a resale because they were never going to find anything that they liked, and they came in and they were prepared, and they just helped the process, and they did such a great job in guiding their customers through and helping them get the home they really, really wanted. And my job was super easy as a salesperson, and the realtor did such a great job of vetting out those builders that, you know, it became a really nice partnership. So you can build rapport with with builders, salespeople, who, if you make their job easier, and still at the same time provide you know, you're doing your homework and being an advocate for your customer, your buyer, you can do both, is what I would argue. So keep that in mind. Qualifying a buyer for a home is much harder than a resale. Absolutely not. You know, just like we talked about, it's just like any other home. And the biggest thing to keep in mind is just make sure you're building a little room for options. So if a house is $350,000 and you ask the salesperson, what do people typically add in for this type of home? And they say, oh, $30,000, $40,000. Okay, well, pre-qualifying, we had $400,000. You know what I mean? So that you have some room in there. Building a new home is stressful. Yes, it can be, but you know what? Most new construction these days is not. It's really well organized. It's like going into the store and buying an iPhone off the shelf. In a lot of cases, it takes longer, of course, but you get to pick your options. You know, obviously it's a little different, but it's usually pretty straightforward. So know that it's not nearly what it was. It takes longer to get paid. Of course, you buy today, you don't get paid as a realtor for 6-9 months. Some builders pay up front half. Many pay up front half your commission to keep you engaged. They understand it's stressful. So know that that's not always the case. Client will be forced to use the builder's in-house lender. We talked a little bit about that. I don't think I need to cover it, but just know again that you've got options there. And then lastly, builders are shady and take advantage of my borrower. You know, of course, there's going to be some bad apples out there still, but mostly any of these larger builders, I would say the vast majority just are passionate about what they do, or they're just professional, publicly traded companies, and they have, you know, systems, and you know, there's social media now, and you know, just like builders can't get away with being shady, right? So I'd say those are the ones I hear about still, but generally speaking, it's a pretty smooth process. And keep in mind, new construction, it's clean, it's new. You're not gonna have a problem, knock on wood, with an inspection, because everything's new. You know what I mean? There's no mold. You know, there's no issues with the roof. There's no furnace cracked. You know, heat exchanger, right? I mean, everything's new. So that part's less stressful as well. So I'll stop there. That's my last slide. We're kind of at Q&A.
Yeah, let's go. Let's try to do like a quick fire if you guys compile the questions. Lots of questions. Promise we'll answer everyone's questions as we go back and look at them. We'll show you an email address at the end to email us if you still have an issue. But let's, if you guys have some of the questions, and we'll do a quick game show, quick fire here, and get some answers.
Cool.
Our first question that came through was, does Guaranteed Rate currently do construction to perm loans in all 50 states?
Okay, so the quick answer is no. We do offer construction to perm as a broker option in certain markets, and we do partner with certain local banks where they handle the temporary financing, the construction portion, and we'll do the end loan piece. Quite frankly, in often cases, it is a local bank or a regional bank product. We haven't focused on that. It's a smaller part of the business. Eventually, we'll probably have a more formal product there. So I would say talk to your local kind of loan officer and see if we have it in your market. We've seen it's a complicated product. It's and we feel like when you have those local banks that understand it best and know kind of the local appraisers and the local have the local draw teams and all that, it's better to work that way. So long-winded answer is no, but we do have it in certain areas.
Okay, great. Next question we had come through was, any advice or suggestions on the final walkthrough and the inspection?
That's a good one. Yeah, I mean, final walkthrough, definitely be there, right? Most builders, should have their house buttoned up and ready to go, and it should be spick and span, and that walkthrough with that superintendent or that builder, should be really more of an orientation to the home. It should be how do things work? How do we get access to things? How do I change my furnace filter? Where's the where are all my warranty cards? Things like that. Not so much of a, oh my gosh, that's not done. This isn't done. What happened there? That's the wrong countertop. What have you done to me? It shouldn't be that, right? It should be a really smooth process. So if you're finding, that final walkthrough, if the house isn't complete, that's probably a problem. But otherwise, I'd say, really just be I'd say encouraging. There are little things that are probably not going to be finished or completed. It's normal. There's inspection items like drywall paint touch-ups, could be a cabinet doors missing just because it got cracked or whatever. I mean, there's going to be certain things. Don't feel like the house has to be perfect. Be tried. And I would say as a realtor from your end, pick and choose your battles, right? Don't read your buyer. Don't feel like it's your job to be an inspector, I guess is what I would say. Don't be that realtor that's looking under the countertops to see if there's a mark or something. I mean, and I've seen it. Okay, so just be there as like, hey, let's make sure the house is ready. It's easy to occupy. There's going to be a laundry list of things that probably will get done from the time that walkthrough happens to the time you close. Just be thoughtful about it and don't feel like you're inspector. You're inspector. You're the inspector there. And then I think, what was the last part of that question? The inspection and the final. What was the last piece of that? Sorry.
The final inspection and the walkthrough you answered.
Yeah. And that final inspection, by the way, from the city and the appraisal sometimes comes in very last minute, right? So we at Guaranteed Rate, we have a procedure in place for our builder clients that final inspection from the appraiser that I talked about earlier, where they come in last days to make sure everything's done, and from the city, the certificate of occupancy, we let those come in very close to the end, right? We're not going to hold up a closing because they're not quite there yet. They have to be there to close, but we're not going to make you wait a week after we get it. And that's important. Not every lender thinks that way, because builders do work on a just-in-time delivery basis. So no, it is a mad dash at the end. So when you see like a week before the closing and it's like there's 300 people in the house, that's just the way it is. So that's just the way it is. All
Hey,
right.
Jim,
Yeah.
if you don't mind, let's talk about something that's a little bit more generic. It has nothing to do with like home building,
Sure.
but we get this question all the time. And if you're self-employed right now and you've been out of work since COVID, but you've, taken some odd jobs, some side hustles, how long do you really need to wait before you get pre-approved for a loan in this particular climate?
Yeah, I honestly, it's probably not the best question for me from a qualifying perspective. I'm not a loan officer per se. I'd say probably the best thing to do is talk to one of our kind of your trusted loan officer, or if you don't have one, let us know and we can get you in touch with somebody. But that time period, and in terms of where those guidelines are today, I'm not immediately familiar with. Sorry.
Not a problem. I would say, just as a rule of thumb, if you have self-employment income and you're doing your taxes right, they usually want to see 2 years of self-employed, length. But thank you for trying anyway.
Yeah. No, if I don't know something, I will tell you I don't know.
No, I appreciate that. Also, we got this a couple times too. I know we went into the rate lock cost, but we didn't give a specific example. What do you think typical cost would be to lock a rate for, like, our lock and build, like, for 12 months?
Yeah. So on a Premier Builder rate lock, it's going to be what depends on it. It's going to be either like basically one point, for a year. So 1 percentage point is one option, depending on how you set it up. So on a $400,000 loan, that's $4,000. Yeah, that's one option. It can range. And if you do on the Premier Builder program, it's actually 3/4 of a point, so it's actually less. That's not on a non-refundable. So yeah. And again, most popular is going to be the 6 month, then it goes 9. 12 is the least popular, but certainly we're seeing more people use it because of the length of time it's taking now. And anybody who wants to know more about that, by the way, is welcome to reach out to me, and I can give much more detailed information. We have a grid that we can show you that kind of breaks out the 4, 5, 6, 9, 12 months, the non-refundable versus refundable, and there's a whole, it's a whole thing. But it's very flexible, put it that way.
Any more questions? Nick, Danielle, we can squeeze a couple more in.
Yes, this was kind of towards the beginning of the webinar, but you kind of spoke to realtor commissions being cut. Could you maybe elaborate a little more on that?
Sure. Yeah. So we are seeing some, I travel around and kind of talk a little bit. You're seeing, it depends on what market you're in, part of the country in, but in some of the bigger builders, typically builders cooperate like they normally would on a resale, whether it's, 3%, and in some cases they're dropping that down to 2 or 2.5%, because they're just, they're so short on inventory, and they're so tight on their margins that they're kind of asking the realtors to take a haircut as well. So while they're not cutting the realtors out entirely, they're just saying, hey, temporarily here, we're going to kind of ask you to, take a little less. So that's kind of what I'm seeing. Those are the numbers I've seen and kind of heard. So hopefully some realtors are saying that is kind of not nice. We'll remember this, Mr. Builder. I get that. At the same time, it's sort of understandable because everybody's sort of getting squeezed right now. So just, be patient. I'd say don't not go to a builder because of it, but just be aware they may be trying to beat you up a little bit,
We got another?
Yep, this one's a little more specific, but an agent said, I speak with a lot of senior citizens and they are often interested in downsizing and wish they could buy a new, smaller home. Do you feel that builders will address the desire of so many seniors?
Yes, in fact, I would argue that's the fastest growing segment. It's a great question. Fastest growing segment of the market. I mean, the baby boomers and beyond now, millennials are starting to get there too. Not millennials, sorry. The next, what is it? Gen Xers are getting there, right? But basically, there's a ton of, call it, product that is not age restricted, but age targeted. Communities, both single family and multifamily, townhomes or stuff that are not geared towards older people, but because nobody wants to be old, but they're really neat. It's really neat product. I see a lot of it at the builder show and some of the industry sort of events that I go to. Some very cool stuff. So I think most markets you're starting to see quite a bit of it out there. In fact, there's some, and then there's some scenarios where there's actual family suites separate from the home, but yet connected. So on the same small lot, the main house, but in front, there's a almost like a coach house that looks really well integrated into the home, and that becomes sort of a future or current option for maybe mom or dad to still live with the family and have their own sort of suite, shower, bathroom, and all that. Maybe even a kitchenette, but have a separate entrance to the home. So yeah, I think you're going to see that everywhere, and there's some really creative stuff out there. It's pretty exciting time in the home building world from that perspective.
So let's do one more, and then we'll wrap it up. Thanks for hanging in, everybody.
Yep. Last question here. How does any of these responsibilities of the buyer's agent change if the builder is only offering a referral fee and not a full commission percentage?
So referral fee. Yeah, I guess I'd have to learn a little bit more about that. I guess my first reaction to that would be it probably really doesn't, right? If the referral, obviously the smaller referral fee, the less, less exciting it is. But truthfully, anytime, if the builder says, look, I can't, or I'm not willing to offer a full commission on this, I'll give you a referral fee, take it or leave it, and your customer really wants to be in that community, in that neighborhood, and it's the right fit for them, then, I think your duty, quite frankly, is to probably still work with that customer, that builder, and make sure they're being taken care of through the process, and that's, probably not a great situation, but hopefully it's enough to kind of justify it. And, of course, it's all about repeat business and referrals from your customer. So I hope that answers that question.
Awesome, Jim. Thanks again, everyone, for hanging in. Jim, really, really great stuff. Appreciate your time. Everyone, yes. I promise we'll have an email at the end if you want to ask us, and we can bounce that out Jim and get an answer from him to you later. But on behalf of Jim and Nick and Danielle, thanks everyone. Big number on today's call. Quick mention to our next webinar. We have Marcy Sepulveda, who is the managing partner at Agent Publisher. She could put together a little realtor forum, and we'll have Marcy talk about some expert best practices from real estate agents. And here is our contact information, agents@rate.com. Hope you got some information, some nuggets today from Jim. Let us know if you have any other questions. Anything in closing, Jim, for agents to get out there and get the builder business?
Yeah, just don't be afraid to kind of, knock on those sales center doors. Don't be afraid to waltz in. If the agents or the salespeople are really busy with the customer, don't stalk them. Don't be that one in the corner waiting for them to finish. But if they're not busy, don't be afraid to say hello and chat up a conversation. They're typically pretty darn friendly. So I appreciate everybody coming on, and thanks for all your time. Of course, I love the builder space, and I'm happy to help you in any way I can. So please feel free to reach out. Good luck, everybody.
And to echo Jim's specifics, please reach out to your local loan officer for any specific or other questions. They're happy to help. On behalf of Nick, Jim, Danielle, I'm Kurt Klaus. Thanks for joining today. Everybody have a great rest of the day.